So how we doing? Today is Tuesday, July the 23rd, 2024. Just going live here, going to be going live over the next few weeks, probably until, sometime in December, right before Christmas. And just twice a week until that time, we're going to be talking about seller financing and real estate notes. We're going to be breaking it down into smaller segments. We're not going to be on here really long, keeping, an hour or hour and a half, something like that. We'll probably be here for, 20 to 30 minutes, just giving out this information, wanting to open people's eyes up to seller financing, whether you're a real estate agent, whether you're somebody who invests already, maybe you own rental properties or do some other type of investing within real estate, or if you're looking to get into real estate, um, or if you're somebody who has a property thinking about selling it, but because of things that are going on in a particular market, seller financing or creating a real estate note may be the answer to your situation. And then also for buyers, um, if you understand this information, if you understand, how this works, it can help you possibly get into a property. Maybe you can take this information, somebody that has a property for sale and say, if we can do it like this, I'd be interested. So just trying to help anyone that is in real estate or looking to get into real estate about this particular strategy. Where I am here in New Jersey, it's probably not something that's done a lot. The strategy a lot of times is done more in the South, Southern states, Midwestern states, and some of the West Coast states. You'll find seller financing and real estate notes more a part of the, everyday real estate transactions. So, I'm just gonna, like I said, go through what seller financing is, break it down piece by piece, and also talk about real estate notes and kind of go through that, what you can do, how you can get involved with it, and things like that. So, and just depending on people's reaction and maybe comments to seeing this and asking questions, we may change up, a topic or address a topic from week to week. But overall, the goal is just to try and, make people aware of seller financing and real estate notes. I really think it's a good time. There's a lot of things going on in the market right now, where it's going into a real estate note type of market. You have a high interest rates. It's keeping a lot of buyers on the sideline. Also, we have situations with sellers, quote unquote, locked into their mortgages right now. So, just a lot of things going on. Possible that the stock market is in a bubble and that could potentially burst. And, there may be some things that happen in the real estate market too. There may be a resetting of the real estate market. And so if you can, have an understanding of seller financing and real estate notes, you can kind of navigate, this particular time, and then also grow your wealth by being able to buy these particular assets and getting cash flow, and things of that nature. So hopefully, like I said, it'll make sense to you and pique your interest. And then, if you want to talk further, my contact information will be at the end, and you can reach out, or you can just make a comment to the video wherever you see it. And, we can get a question answered for you. So what is seller financing? Seller financing is when a seller is selling a property and they're creating the financing for the buyer. So essentially, you're doing what the bank does. The bank steps in, usually lends money to a buyer, who then gives that money to a seller, and then that buyer has to repay the bank based on a certain amount of months, a certain interest rate, There's a certain time that the payment is due and a certain payment that is due. So seller financing is essentially a seller becoming the bank. And what happens is that the deed of the property a lot of times will transfer in this scenario. Now, later on, we'll get into different what they call security agreements, because you usually have a note and a security agreement. And security agreements can differ based on the state that you're in. Most people here in the Northeast know the security agreement as a mortgage, but it can be a deed of trust, trust deed, and some other things in different states. You can also have a security agreement where the deed does not transfer until all the payments are made. And a lot of times that's called a land contract or a contract for deed. But again, we don't want to get into too much information on this first video, but seller financing is when you have a piece of property, whether it has a mortgage on it or if it's free and clear, you own it free and clear, you can still sell the property with seller financing. And you're just stepping in, as the bank. And in a situation where you already have a mortgage on a property and you offer seller financing, you just have to make sure that the bank is continuing to get paid, and then anything over and above what you pay the bank would then come to you. So that's kind of the quick definition of what seller financing is. And then you want to know, and I kind of already explained what secures you or what your security is. Your security is the fact that you, now becoming the bank, have established a lien against that property, saying that this buyer owes you X amount of dollars over the next few months and has to make this payment and this interest rate. And that gets recorded against the property. So it's a lien against the property. So, and then what the buyer does is that they pledge the property back to you as collateral, saying, as long as I make this payment, you can't take this property from me. But in the event that, I'm unable to make this payment, your security in the deal is the actual property that you could get back. There are three parts to seller financing. It's the people, the property, and the paper. So somebody's a buyer, you have this particular property, and then the actual, documents to write this all up and how, it's going to get paid back to you. So I'm going to go over, why somebody may do seller financing from a seller's perspective. In the next video, we'll kind of get into why, a buyer would do it. But for today's video, we're going to, go on to, why a seller would sell their property with seller financing. So there are pretty much three reasons. The buyer is having issues. The buyer's having issues qualifying through a bank. The property has some type of issue. Maybe, it's a repair issue. The type of property is, a lot of times you have properties that have a lot of acreage on it, and it's not something that a bank will necessarily finance. So it could be a number of reasons with the actual property that makes seller financing a better option. And it could also be, the other reason is it could be a well thought out investment strategy. So if you are someone, thinking in terms of an investment strategy, you can use seller financing as a way to do that, because you'll be collecting money up front, you'll be collecting money monthly, and then because of amortization, you're still owed a significant amount of money in the future. and you have the ability to take, those future payments and cash them in today for money right now. So let's just say, if you had a situation a year after or 2 years after you sell or finance the particular property and that you needed X amount of dollars, you have the ability to take those future payments and cash them in for money right now. So that's, another, investment strategy that you're thinking about that you would want to do seller financing, use seller financing in those instances. So a lot of times, when it comes to like looking at it as an investment strategy, the seller of the property may not need the all the equity from a sale of a property. Let's just say you're going to get $100,000. You built up $100,000 worth of equity that you're going to get from selling this property. You may not need to take all that $100,000 right now and put it towards something. You don't have a place for it to go. You don't have another investment to put it into. Another vehicle that you can put it into that's going to, make you some money. So you can take a certain portion of that, and then the rest of it can be, used at a later time if need be. And you might want to consider seller financing in that particular situation. So, again, property, we'll get into like the property with issues. It may be a mobile home. In terms of the value of it, a lot of times you can't find banks to loan buyers money on mobile homes that are less than 100,000 or 125,000 in some instances. But, because these are lower priced homes and what it costs the bank to originate a loan, they won't um, they won't finance the buyer to purchase that particular property. It's just not something they're interested in. And that happens in a lot of these rural areas. And like I said earlier, a lot of this stuff happens like in the Midwest and the southern parts of the country where you have these different developments, where you have mobile homes and manufactured homes and things like that, that are less than $100,000. And so a buyer can't necessarily get financing. So the seller will sell finance for them. You could have a mixed use property. Again, having certain issues, being able for it to get financed or someone to lend on it. And maybe the property needs repairs. Maybe you haven't built up a lot of equity in the property, and for whatever reason, it has a certain amount of repairs that you don't necessarily want to do. You can sell or finance your property so you don't have to fix those things. The person getting into the property can fix them because they're paying you over time, and you can still get a maximum amount of money for the property and not have to do those particular repairs. Also, maybe the property is not selling. Maybe you're in a market where prices are maybe coming down. Maybe the demand is more than the supply, and so you're not selling the property fast enough. Maybe it's been on the market 100 days, 120 days, and you're not getting a lot of activity on it, but you really need to sell this particular property because you want to move somewhere, a job, certain family situation, whatever the case may be. You can structure this in a way where it could attract more buyers, more potential buyers for yourself, if you would offer seller financing. And then too, if it's not enough money for you to walk away with some money because you have to pay a realtor, you have to pay closing costs and things of that nature. You can maximize the equity in the property or what you can actually receive from it by seller financing the property. So also distressed situations, maybe you need to sell quickly. Maybe family situation came up, job. A lot of people sometimes in the military, they have to go on assignment, and instead of keeping this property here and waiting for them to finish their assignment, they just want to use this particular financing option, to seller financing, to sell their property. This way they don't really have to worry about it. It's somebody else's responsibility once they've, sell or finance the property. So there are a number of reasons why, a seller would want to sell or finance a property. Uh, Maybe you're a landlord. A lot of landlords, they like the rental income from a property. They like to collect that monthly income, but they're tired of dealing with tenants and toilets and repairs and everything that comes with a rental property. Seller financing can get them probably more cash flow per month without all of the hassle of running after a tenant, having to fix something and having to, chase people, at the first of the month for rent and things of that nature. Maybe you've just done this for 10, 15, 20 years as a landlord and, you're just tired. A lot of times this is a great option for those that don't want to do that anymore, don't want to have that hassle of being a landlord. So, that's another reason. And like I said, a lot of times when you run the numbers and you look at property from a investment, from a cash flow perspective, from a rental to seller financing, a lot of times, you're getting more monthly income than you would as a rental. And then two, if you look at a rental property, maybe the first 2 years that you owned it, let's just say you made, $15,000 each year. So you're 30,000. And then in year three, you have to go repair a roof, have to go repair a water heater, a furnace or something like that. You have to factor in now that you have to go and pay that. So you really didn't make, maybe this 30,000 after, this repair, or maybe there was a couple of repairs in year three. If it's a, multifamily dwelling and you had to fix something in more than one unit, you have to kind of look at what were those expenses and kind of reevaluate, well, how much money did I really, bring in from this particular property? But when you sell or finance, you don't have those issues. The person living in the property is responsible for any type of repairs or maintenance of the property. So it takes all of that away from you. The only expense you may have when you're seller financing or a note holder is your servicing company. And potentially there could be other things, that we'll talk about later, but your primary expense as a note holder is uh, your servicing company that's going to collect that payment and make sure that, that you're paid each and every month, make sure that money goes into your account. And they keep an eye on, other things like taxes and insurance and stuff like that, and make sure that they're paid for you. And that's a very minimal cost. A lot of times it's somewhere between like $30 to $50 a month, just depending on the company. So, when you pull away all of those other expenses that you have to deal with on a monthly basis as a rental, landlord, this is why the cash flow a lot of times increases, and it can increase significantly, when doing or when offering selling. So, one of the other things you have to look at seller financing as an amenity. You're actually it's like a automatic garage or some other amenity that comes with a house, um, because you can actually sell your house a lot of times at a premium. You can sell it for just about 10%, maybe a little bit more than what the market value is, because you're extending an opportunity to somebody that can't traditionally go and get bank financing. And so because of that, you can offer your property at a premium. So not only, you're able to sell it, you're able to sell it, at or above market value because you are offering this. So, and then also there's a lot of tax advantages. So like I had mentioned earlier, if you had that $100,000 of equity, a lot of times that's capital gains. And I'm not giving tax or legal advice or anything like that, but you would want to speak to your, tax person, tax attorney, or something like that, the person that prepares your taxes, about an installment sale and the benefits that it could bring you in terms of your taxes. Because you don't necessarily get taxed on the whole $100,000 that you sold the property for. Um, you get taxed on, the money that you actually do bring home, and then you'll be able to collect, payments over time and see how those are taxed. And then there's things that you can do to reduce that tax burden, in the coming years. So you could discuss that with your tax person, but an installment sale does have some benefits when it comes to taxes, and not having to take possibly such a big hit on capital gains tax. So, that's kind of I guess part one or day one, of this that I'll be going through in terms of talking about seller financing and notes. So hopefully you understand, what seller financing is. Basically, you just becoming the bank and offering your particular property with some terms to a buyer. And you're going to collect a down payment. You're going to collect a monthly payment, and then you're going to be owed a certain amount of money in the future. And let me just do one thing. Let me show you one thing before I go here. I'm going to show you an amortization schedule. If I can find one really quickly. Where is my amortization schedule? But I have one pulled up. Doesn't look like I do. Let me see. Here's the amortization schedule. So here is the amortization schedule. And so what I want to do is show you just an example. So right here we have $100,000 house. You let's just say you're gonna offer seller financing, and it's $100,000. And let's just say you do 8% interest for 360 months. So a lot of times what you can expect in a situation like this on a $100,000 house is to receive $10,000 as a down payment. So we have $10,000. Then you're going to receive $733.76 per month. And so let's say we collect that for 3 years, so 36 months. So you would have collected another just over $26,000, plus you received $10,000. So you're at, just about $36,500 almost. And if we look at this amortization schedule here, after payment, what is it, 36? As we said, 3 years. You're still owed over $97,000. So if we add $10,000 to this, and then 97,000, so if that person paid, was going to pay off the seller financing deal that you gave them, you would have collected over $133,000, over $133,500 in just about 3 years, with total money that's collected and everything like that. And again, if you want to minus, your, $50 or $35, $40 fee for your servicing company, that's not going to lower this number that much. So, this is why we say that you can sell your property for more when you sell it with seller finance. And, that's what we're trying to get people to see, especially those that, again, do not have to receive all of their equity at the time when they sell the property, because in the long run, you actually sell it for more. And then even in that example, after 3 years, if you had to liquidate, needed some money or something like that, you have that unpaid balance of $97,000, and the rest of those payments, all of those other payments that are still due, because there's 360 payments in a 30-year term. So you could sell between payment 37 to 360 for a certain amount of money if you needed to become liquid, if you needed to do something, if you needed to purchase something, you saw another investment, wanted to take advantage of another opportunity somewhere, wanted to take a vacation, wanted to pay for a kid's college or a wedding. You have $97,000 worth of payments owed to you that you can sell today for a certain amount of money. And that's the great thing about, seller financing and real estate notes. So hopefully this piqued your interest. Like I said, we're just at about 30 minutes. We're trying to keep these, between that 20 to 30 minutes. And you kind of, understand, have a good understanding of what I'm talking about. And hopefully if you don't, please ask some questions. If you want to reach out to me, my telephone number is 973-475-8488. Or you can email me at investorgmr@yahoo.com. Any questions that you may have, or if you see this posted somewhere, you can, post your comments and or questions, and we'll get them answered for you. But we'll be back Thursday, 8 p.m. Eastern Standard Time again, going, a little bit further on the seller financing. We're going to handle seller financing first, and then we'll kind of get into real estate notes, after that. So hopefully, when you see this, you want to join me live. If not, you're always welcome to watch the replays on my YouTube channel, Abundant Capital Group. All right. Have a good night. Talk to you soon.